After several strong days of tech outperformance, it's no surprise to see this area of the market cool off and take a breather. Now, I'm not saying that this is some sort of charge up to some sort of massive run, but after you see a big move, you tend to take a little bit of a break. There's a saying my dad told me, stocks take the elevator on the way down and the stairs on the way up. And we had recently seen a lot of tech stocks really take that elevator down. Well, next thing that's going to happen is if they're good and they deserve to go back up, they will take the stairs up, and we're beginning to see that. But as we had seen tech have its monstrous days, we had noticed, and in previously recorded videos discussed this, that the focus was taken off other stocks that are still worthy of our attention and our purchasing. These are things like real estate and energy. Those areas on days where tech had been ripping they had been somewhat down and presented good buying opportunities even after this big move. We've been in this move since the turn of the new year, if you're a religious follower of mine. But they're still very well priced, energy and real estate companies. And they held up very well with almost no large drawdown when that tech sell-off was occurring. So these stocks are well priced, deserve a position in your portfolio, and you should get some exposure, even with them continuing to run here. Now, where does tech go? Because is it just going to cool off? Is it just going to get hot and cold? That doesn't seem very stable. Well, I think it's going to have continued path on the bullish trajectory, but the rate of increase is going to start tapering off because people are beginning to realize that there's a disparity between good and bad tech. There is tech that is just not priced well. Things like Zoom, Docusign, Peloton, they were very interesting stories and they garnered a lot of attention and a lot of buying. But in terms of a long-term business proposition, Zoom obviously has that, but has it all factored in. Docusign is a fantastic business, but has pulled forward a lot of gains. And Peloton is very susceptible to competition. And these are just three names. My point here is these companies have pulled forward a lot of their potential, and it's factored into the current price. It's just not worth it, in my opinion. And I believe these stocks are going to either stay at their levels or continue to sell off a little bit. And that's deserved. And that will prevent the NASDAQ from having any sort of meteoric rise because these heavier weighted companies that have seen massive increases in market cap aren't worthy of massive increases in price. But that said, there's certainly still a lot of interesting small to mid cap technology companies out there, particularly in the genomics space. Even something like Palantir, they can continue to create fantastic products and have a fantastic list of customers. These are companies that are earlier stage, less lifetime total value factored into their current valuation, especially the Crispr stocks, which I continue to talk about. So if you're going to do tech, I advise you to do it right. A good portfolio right now consists of things like real estate and energy. These are areas of the market that haven't really seen massive gains, but are priced very well and are well below pre-pandemic levels, but they are correlated with inflation. So as inflation takes effect, they just on a nominal basis will increase in price. Not only that, but they are below pre-coronavirus levels and they have been depressed pre-coronavirus. Energy especially. People have hated energy for a very long time. But these energy companies pay dividends and the price of energy is very strongly recovered. So I would avoid the morality argument about not owning energy. We are here to achieve a good return. And yes, we believe that morality is an important part of our planet. And, if you aren't a moral person or a company, you will lose in the long run. But companies like ExxonMobil are focusing very heavily on carbon capture technology. They know this. They know they want to be around forever. And I'm bullish on that thesis. So a lot of these companies are very well priced and very interesting companies, almost like tech companies, and they may even perform like these tech and growth companies did in 2020. We had originally called this the 2021 story trade. And we are in the very early stages of 2021, have yet to see what the equivalent of the pandemic was in 2020, that being the reopening. We have yet to see the real reopening. I just went into In-N-Out with no mask, ordered with no mask. It was pretty nice. Excited for everyone else to be doing that. And the people that I'm ordering from not to be wearing a mask. So that's the deal. Find the right prices and the right companies and you should be okay. And until next time, peace out.